Hey everybody, it's Seth and Paul for Everything Money Channel. On this episode, Paul actually finds a stock he is buying. Yes, we're not talking about all these crazy overpriced stocks. We're talking about one that's in the tank and has some options to get moving in the right direction. Paul shows you why he's buying Carnival Cruise right now. We get some feedback online from the viewers, our wonderful viewers, in that when we do a deal of the week, Paul's never buying, and when we analyze stocks, they're always too expensive.
That's not true. We bought Southwest.
This is the feedback we're getting, Paul. So we're going to talk today about something Paul is buying. Now, Paul, there's some sort of...
In addition to Southwest.
In addition to Southwest. Paul is buying this, and we're going to analyze why he is buying. However, we're not telling you to buy, right, Paul? There's some sort of legal thing we have to say?
I'm not your financial representative. All these.
However, you do probably know more than what
exactly.
Yeah. All right, Paul. Go ahead, Paul.
In investing, we got to remember everything in investing is about assumptions we're making. Investing is an art. It's not a science. It's not just we talked about in the previous video, Tesla. It's an art, not a science. If it was a science, it would say this is not going to work, right?
Yes.
There's an art of analysis of.
Wait a minute. I'm confused. Don, did you just hear that? I thought you were saying investing is a science and is determined. I thought that's your point with Tesla. Is scientifically by the numbers, it's a no buy.
Yeah, but there's also qualitative aspects. Tesla's so far from reality that I'm sitting there saying making these assumptions.
Okay.
It still isn't justified.
Let's get back to it.
Okay.
I want to bring this up, folks watching, because we always talk about overpriced stocks on the show and why they're overpriced. So I said, let's get one that's in the tank and let's see if we're buying that one, because we don't want, if we're not buying the overpriced, why not try and buy one that's in the tank like Carnival Cruise Lines?
So the cruise line took a big hit. As you can see in the 1 year chart, earlier this year, Carnival Cruise Line was around, I shouldn't do that. Carnival Cruise Line was around, what was that price? Like $50 a share. 52, 53.
Wow.
And it got as low as like $7 or $8, and now it's currently sitting at $16. So 1/3 of what it was before. Now what happened? COVID happened. All cruise lines are shut down. So when this whole thing went down, I was thinking to myself, okay, airlines are greatly affected. Cruise lines are greatly affected. They're all getting smashed. So when that happens, the value investor in me says, okay, are we going to lose airlines forever?
I would no. There's no way.
Are we going to lose cruise lines forever?
We could lose some cruise lines and airlines.
Sure. Are we going to lose cruise lines forever and airlines forever?
No. People can't love this shit.
What you just said was the key part.
Go on.
The qualitative part of it is we're not going to lose all of these forever. It's not like the paper industry that's just dying and dying and dying. The newspaper industry is dying and dying and dying. We are going to have good companies that stick around. So my next comment was, okay, let me go to a balance sheet. See who's the best balance sheet. In the cruise line world, it happened to be the biggest cruise line, Carnival. In the airline world, it wasn't the biggest airline, it was Southwest. So then I sit there and I go, okay, do they have the money to withstand the downturn? So I looked at their 10Ks, how much money they're raising, how many boats they're selling, and they also announced that they had enough money to withstand basically, at the end of the day, it ended up being about 11 and a half months of no revenue whatsoever.
Okay.
So I was like, okay.
Wow.
What now? So this is the qualitative part of things. You have to then sit there and say, and by the way, we're not going to really get into the numbers part of Carnival until a little bit later. But I want to kind of go through my thought process about why I picked Carnival. So then I thought to myself, okay, if cruises don't have cruises for a year, who's going to make it? The ones with the most debt or the ones with the least amount of debt?
Least debt. Carnival
had a great debt to equity ratio. I was like, okay, they have a low amount of debt relative to how big they are. Okay, this helps. So these are all the things I look at when I'm looking at the qualitative aspect of it. It's still quantitative in the sense of looking at their balance sheet, but I also want to look at it and say, do they have the ability from a customer service? Are they desirable? Is Carnival Cruise Line a desirable cruise line?
I have no idea.
Oh, absolutely they are.
Okay.
They're the number one in the world.
Okay.
I believe they're number one in the world. The largest global cruise company. More than 100 ships.
Wow. 100 ships.
They own Carnival Cruise Line, Holland America, Princess Cruises, and Seabourn in North America.
So tell me this.
Yeah.
Can we go back and analyze this stock when it was really good?
That's exactly what we need to do. That's exactly what we're going to get the numbers for. So the next step is, okay, let me go see what these should be worth when things get back to normal.
Okay.
So I went to their financials. And I'm going to do a yearly analysis starting at the most recent year. So Let's start, Seth. Let's do our 5 pillars.
8 pillars, Paul.
8 pillars.
You came up with these things.
I said 5 because I was thinking 5-year.
Right. Revenue growth over 5 years.
2015, 15.7, 16.4, 17.5,
Constant revenue growth. Love it.
20.8.
Love it.
Constant revenue growth.
Profit growth. Pillar number 2.
Pillar number 2. Profit growth. 1.8, 2.8, 2.6, 3.15, 3.
Check number 2. I love it.
So it's a little choppy, but it's still going up.
Free cash flow growth.
What is free cash flow, Seth?
I can't remember.
God damn it, Seth.
I can't remember.
Seth, I literally ask you this question in
every
video.
single podcast. Just free cash growth is
Free cash flow.
net operating expenses
No. Operating income
minus net operating.
less capital expenses. So net operating income is the income from their operations, the actual core business,
Yes.
less the capital expenditures, how much money they put into the business to make their property, plant, and equipment better. Now, I will say I expect this to be lower on Carnival Cruise Line.
Why?
Because big ships, 100 ships, require a lot of investment year to year. Upgrades, maintenance, things like that. Do you know what I mean?
Okay.
So let's look at it.
Free cash flow.
Free cash flow growth over the last year. Annual. Okay. Now here's where we have a little bit of an issue, which I don't like. 4.5 minus 2.3 is 2.2. 5.1 minus 3 is 2.1. 5.3 minus 2.9 is 2.4. 5.5 minus 1.7 is 1.8. And then 0. So, they have a 0 here. No free cash flow in the last full year before COVID happened. That's a red flag for me. Why is that? Now, I'm going to go look at previous years, and they were like 0 here, a little bit here, a little bit here, a little bit here, a little bit here, then all of a sudden they skyrocketed. So this is kind of a red flag to me. I want to understand why this happened.
Okay.
So I'm going to go ahead and put an X on this one. Because it's kind of a gray area, but I look at the previous 5 years, and they didn't have much free cash flow, and all of a sudden it skyrocketed. And then all of a sudden it plummeted back to 0.
Okay.
Kind of a red flag for me. Not the worst thing in the world, but I don't like that very much.
What about PE? Not now. Not today's PE, but what
Okay.
about PE
Great.
when times were good?
Okay, so they made $3 billion in their last full year, ending November 2019. $3 billion, right? Right now they're worth $14 billion. So if they get back to normal, 14 divided by 3 is 4.7. Their PE is 4.7 on stabilized income.
Okay.
It's very low.
Yeah.
So it shows me that there's a lot of room for them to withstand some pressure.
But what was their market cap? Can you look up what their market cap?
Yeah, their market cap before was 42.
So
It was like 16. It was like 13 point. It was still pretty reasonable.
still pretty good. We won it under 15.
Like
we won it
14.
around 15.
Yep. So when it was normal, it was about 15.
This might have been a buy. This might have been a buy even in good times.
Yeah, and it was sucked when you saw it go to 7.
This is a super buy now, Paul.
Well, we got to figure out. Remember, when things like these happen, it's about can these companies withstand what's going on?
Which leads us into our fourth one, which is total current assets greater than total current liabilities.
Now,
Paul.
for this one, I'm going to look at the current numbers. I'm going to look at the quarterly numbers, most recent numbers. Most recent numbers. Oops. Let's go to the balance sheet. That's where the total current assets are. Total current assets are basically all the cash on hand, to make it easy, all the cash on hand they have. Total current assets of $8.2 billion.
Mm-hmm.
Total current liabilities, 11.86. Now, the one thing I know about this company is...
What about the past years? It's just
So the past year is a great question. So let's go to their last full year. They had $2 billion in cash. So you see a big jump here versus $9 billion in current. So the ratio is a lot smaller. Why is that? They sold off some ships, took off some debt, tapped their credit lines, etc., because they wanted to withstand this.
Yeah, okay.
Now remember, a lot of their current liabilities they're still getting bookings. They can't take the revenue on those bookings. Those are a liability until the ship actually happens.
Oh.
So a lot of this cash on hand is actual cash on hand.
Okay.
And they're bleeding about $600 million a month. They have $8 billion in cash.
Okay.
They can sell more assets, et cetera. They can go take more debt on to...
They can sell boats?
They can sell boats.
To whom?
A good question. They can sell... They've sold a few boats.
All right, go on.
So you look at it going, okay, they can still withstand a lot of leg room here. I look at them and say, even though the balance sheet isn't great currently, it's because they're trying to withstand this outlying effect.
Okay.
And there's already talk right now of cruise lines coming back on in the next 6 months. I think I even read like November they're talking about it. So I look at this saying, okay, when that finally does happen, what is the company going to be worth? And that's where I did my analysis. I won't get into the thorough thing. Let's keep going. So this is a red X here too.
Okay.
But again, it's like a normal, it's like a, okay, I understand it. But go ahead.
What about price to free cash flow?
So price to free cash flow, it's around 7. It was around 21 during normal times.
Okay.
So it didn't really qualify.
We want a greater or less than 15.
Yes, correct.
Profit margin greater than 10.
Okay, so let's go to
This
their
one's got to be
profit margin.
tough too, huh, Paul?
Well, then what we're going to do here is we're just going to go to their normalized statement because this is where I care about their normalized. When they're normally operating, what are they making in profit?
Oh, okay. Yeah, that's good. Yeah, right. Not right.
So
This is
they had
obvious.
$3 billion in profit on $21 billion in,
Revenue?
14.28%.
That's pretty good.
Yep, pretty good. So check mark there.
Okay. And the last one is decreasing share count.
Okay.
We want decreasing share count because we don't want them
Diluting.
diluting new shares. We want them
So if
buying
you own a
back
share
their shares.
today, if they keep adding shares, your one share is still one share.
But it's worth less.
It buys less and less it owns less and less of their stuff.
Decreasing shares over the last 6 years.
10 years.
10 years, sorry.
788 million, 787, 778,
It's going down.
775, down to 690.
It's going down.
Yes. Now, I will say, let's go to their most recent one. I wouldn't be surprised if they issued more shares, potentially. I don't think they did. Let's see what their share count is now.
Share the love for this video by smashing that like button. Look at what Paul's giving you in this analysis with these Y charts. It's incredible. Keep going, Paul.
And guess what? I was right.
Thanks.
They have issued more shares
Okay.
to help withstand the pressure that's going on. Okay, that's understandable. I'm not worried about that so much. I still believe it's a company that will survive through my analysis, not through just looking at this. This one required me to read the 10K, talk to other value investors I knew and said, what do you think of this? And I thought it was a $40 or $50 stock when it's all said and done. But if it's going to bleed $15 a share, which could be $14 billion, if I buy it for 15, it bleeds 15, that's $30 investment, $40 or $50 a share it's still worth. I know a guy who's actually very conservative who thinks it's worth $50 to $60 a share. So I looked at this and said, I'm going to buy this stock. And guess what? I'm going to buy it on the way down. My first purchase, I bought at 19. My second purchase at 13. My third purchase at 11. And I haven't bought any since. And now it's at 16. So my basis, I'm still up on my basis right now.
Yeah.
But if it goes down to 7, guess what I'm going to do?
Buy more?
Buy more. Because I haven't built a big enough position yet where I'm like upset. No new information has come to me. Now, all of a sudden, it's $7 a share 6 months from now because cruise lines have said we're not going to ship for 2 more years. Time out. I'm going to take a loss, sell my shares, I'm out. Because the information has changed. But right now, I'm assuming they go back on the full seas. In a year from now, they're going to be close, not fully normal, but they're going to be in a stable cash flow front.
Let me bring up a broader question here, which has been bothering my mind.
Yeah.
So we talk about overpriced stocks that have a lot of heat behind them. Tesla. A lot of fanboys, a lot of love to the death. People argue this, it's worth this.
What happened here?
Just hold on a minute now.
Okay.
So I say, you know what, your position is let's not buy these overpriced stocks, which makes a lot of sense. No reason to buy high. Now we have one when it's very, very low. It's on sale, obviously. But then there's this here's my point. Is it safer to buy, here's the dilemma. Do I buy a company that's on sale when the sale could go to zero? I mean, obviously this is much closer to going to, see, I'm getting my numbers confused. I'm thinking because Tesla's high and the fanboy is high that it couldn't possibly go to zero, but it still could.
Yeah,
but
everything can go to zero.
I guess
This
the
can go to
point is,
zero.
how is this a safer, more smarter investment?
Because I understand what it would take for this company to stay open, and I believe it'll stay open. I don't believe, if this was the biggest cruise line in the world, but they had the most debt, I'd be concerned. They had the least amount of, they didn't have actually, I think the ratio was one of the lowest. And I did this analysis months ago, and since then, not much has changed.
Sure.
So I haven't had to redo, I just keep looking at when cruise line will come back. It's all about your style, Seth. My style is, I want to buy $1 for 50 cents.
Yeah.
Tesla is, I'm willing to buy $1 for $4 because I think it's going to go to $8.
That's right.
There's a big difference. This one, I'm fine. And as it goes down, guess what I go? All right, more shares.
Yes.
And guess what? This thing here is the exact opposite of Tesla. Oh my God, cruise lines are shut down. This is the worst stock ever.
Yes.
That's what happened here.
What was it at?
$8.
You know, I think the key with this too is this could snap instantly. I mean,
It could.
They could say
The
cruises
second they
are
go
back
back on the second they go back on, I think this is going to be boop.
Yep. I mean, like, it's funny. DeWine, we're in Ohio, folks, and the governor came out just a week ago, and he's going to set this big meeting, and he's going to say talk about fall sports, and we were totally expecting him for just slash all fall sports. Ohio State's not playing football, so they're just going to cut all boom. Nope, let's run them. Next week you're playing. It's like, okay, now we're going, right? And so like this could easily be one announcement away from snapping right back into
I think once
position.
I think once they start saying we're going to cruiser back on, this is going to start. Now, granted, there's going to be a slow recovery time because it's not going to be from 0 to full occupancy.
Yeah,
that's not going to happen because people are still scared of COVID. They're still going to be like, oh, I don't want to be around these people, etc. But this is one of those opportunities where I believe someday we're going to look back on this and go, should have bought.
Yes.
You're going to look at this big blip. Look at their 10-year. Look at their max from 1990 on. They were at $7. The last time they were at $7 a share
was the 90s.
The 90s. So let's go back to 1996 and see what they made when they were at $7 a share in 1996.
Oh, good idea, Paul.
So let's go back to 1995, 1996, last time they were at $7 a share, and see what they made back then. So with trusty Y charts, they had $2 billion in revenue. They're 10 times larger. They had $450 million in profit. They have seven times more now.
Wow.
So I'm looking at going, if I believe, this is the big assumption I'm making, and everything about investing is making assumptions. The assumption I'm making is they will be able to stay in business and not have to incur massively more debt from today. They will be able to use their cash flow to withstand this whole thing. And I think it works. And I'm a buyer of this company below, I think $20 a share, because I think when it goes to 50, 60, that's worth my risk. And if I'm wrong, I still think it's a $30 stock.
My son Gio's going to love to hear this.
He's going to buy some.
He probably will.
Don't buy a lot. Just buy enough that he's okay losing.
Yeah, well, that's always the case with stocks, right?
Yeah, except you have all your money in freaking Tesla and Amazon.
Thanks for joining us on the Everything Money channel. Smash that like button. Watch all of our damn videos. Ask questions below. Comment on how handsome I am. And go to my website, dgfspray.com. Order yourself some graphite spray. I'm wearing a swag, Paul, to all of our viewers. I'm just bumping the commercial in. Brought to you by DGF and Coke Zero. We're not brought to you by Coke Zero. Thanks, everybody. Thanks for watching. Love you. Bye.